James Knightley joins in. He's the Chief International Economist at ING, and Santosh Rao, Head of Research Partner, Manhattan Venture Partners, with us on the show. Gentlemen, thanks so much for taking time out and joining in. James, I'm going to begin with you. Given what we saw overnight with the US Fed, that comment really sparked that relief rally, and it seems that it was pretty much priced in and on expected lines. Question is, what's going to be the road forward when it comes to the US Fed's rate hike trajectory?
Yeah, well, we did indeed get the 50 basis points as widely expected, as you suggest. But, if a 50 basis point hike can ever be interpreted dovishly, it certainly was today. There had been a lot of talk, and I think justifiably so, about the Fed potentially stepping up even more aggressively in coming months, possibly doing 75 basis point hikes. But he clearly downplayed that, suggesting that's not on the agenda right now, and indeed suggesting that it's going to be 50 basis point hikes in June and July. So markets have got quite a lot of clarity now, unless something radically changes. So the Fed is going to be taking these sort of 50 basis point incremental steps, June and July, on the face of it, and then the Fed will take it from there. But we think the risks are arguably skewed to a more hawkish stance. We still see a faint chance of a risk of a 75 basis point hike. After all, inflation is very, very high. The labour market is incredibly tight as well. And if the Fed is serious about getting inflation under control, we suspect that an economic rebound in the second quarter, coupled with this inflationary and the labour market backdrop, we could still see the Fed have to do 75. But at the moment, that's a non-consensus call.
Hi, if I can jump.
Santosh Rao, I'll come to you now. Good morning. The US Fed, of course, drove it right down the middle of the road. That's why the reaction that you saw maybe overnight. When it comes to Wall Street, a very different picture as far as India goes, where a surprise 40 bips rate hike was announced, change in commentary. My question for you is, when you've got all this kind of clarity that is coming in from the US and the winding down of the balance sheet, and here you have one of the most exciting markets on the planet coming out with a surprise rate hike, what do you think is going to mean for flows? We had seen foreign investors press the sell button the last couple of months when it came to the Indian markets.
Yes. Before I get started, I agree with everything that James said. I think just for the backdrop, I think what we got, the biggest takeaway here was that we did get some clarity. They were not as hawkish as people expected, so that was a good thing. So in terms of flow, I think the dollar, you saw the dollar going up. I think there's a safe haven trade going on there, money coming out of other countries into India, into US rather. It's the cleanest shirt in a dirty basket, or whatever you call that phrase is. So I think that's what was going on. People were coming in. The dollar was got a good bid here. The bonds got a good bid here, and the dollar got a good bid here. So I think that's what was keeping the dollar up. So the outflows will continue as long as the uncertainty remains in terms of recession, the supply bottlenecks, and also the COVID. I mean, that's a big lingering threat out there. China is still locking down here and there. It might get worse. So there's a lot of those issues, and the war is going on. So in that sense, I think US is the safest haven at this point, and you'll continue to see some outflows from India, if that's what you're asking.
Okay, so we're going to continue to see outflows from India. That's the word that's coming in from Santosh Rao. James Knightley, what about you? Because, we would love to know the India impact as well. Typically, when rates do go up, you do see flight of capital. It's the highest rate hike that we've seen in the United States in 2 decades to fight inflation.
Yeah, I mean, when you contrast what the US is doing, and arguably also the Bank of Canada as well, they're being quite aggressive. They've done 50 basis points. They're going to be bringing down their balance sheet even faster than the Federal Reserve is. And then you compare that with what we've got going on in Europe, where it's a very, very different story indeed. Obviously, the geopolitical tensions are all the greater, and arguably Europe is more exposed to those COVID containment measures that are going on in China, given the higher manufacturing orientation of the European economy. So we are looking at a diverging sort of European, North America divide in terms of how central bank policy tightening is going. And I think that certainly is going to contribute to ongoing dollar strength and also against emerging markets, as you suggest. I think, the Fed is going to be again, really at the forefront of the policy tightening, and the growth story is still reasonably good, I think. So, yes, we certainly see the dollar remaining in the ascendancy, and certainly against the euro and other currencies. I mean, euro could be at risk of hitting parity against the US dollar if we do see this ongoing narrative of aggressive Fed rate hikes and the ECB being somewhat constrained by a much weaker economy and an inflation narrative that the ECB has got less control over. There's much more strong domestic demand in the US to justify Fed rate hikes. In Europe, the inflation narrative is still much more of a supply shock orientation, and therefore the justification for the ECB rate hikes is far, far less. So I think certainly the dollar is going to continue performing pretty well.
James Knightley, Santosh Rao, both of you, thank you so much for taking the time out and speaking with us today.
Thank you.